Okay, everyone, it's Big Ed here, and today I am joined by Michael Church, who is a financial advisor with Evolution Financial Group, and we're going to ask him some questions in regards to your future, and also how to build wealth and how to get back on track. So, good morning, Michael. Just wanted to reach out to you today because I know you're an expert in your field. And what can you tell us about what you do as a financial advisor?
Good morning, Ed. Thanks for having me on. I do everything from financial planning for college funding for your children, setting up retirement accounts, getting you set up with the right life insurance policy for your families. I help people go over budgeting, worksheets, tax mitigation and retirement, pension maximization, every facet of financial planning. We can handle here at Evolution Financial Group.
Great. Just looking at certain situations, somebody's coming out of either a long-term relationship, or they're with someone and, their life has changed tremendously in terms of, once they had two incomes, now they're down to one. What can you suggest, or what do you suggest for somebody that just comes out of it and then all of a sudden they're like, oh my gosh, now what do I do? They had everything. Maybe it was a divorce or something. They had everything, and now all of a sudden, they're starting fresh and new. And what can they do to get themselves back on track financially, and to get themselves ready to go for their retirement, their future?
So that's a definite process. There are ways to do it. Speaking on going from two incomes to one income, getting a solid budget on point is the best thing you can do. Now, every situation is different, whether you're coming out of this divorce with thousands and thousands of dollars of debt, multiple loans. Some people walk away and, they sold the house and paid off everything. So everybody is in a different boat. But the main thing is keeping the money that's coming in accessible to invest, to put away, to gear towards your retirement. And one way I sit down and go over people's finances and look at what their actual bills are. We have worksheets that you can fill out, and I stress to everybody, be as honest with them as you can, because it depends on where you go in life. Not everybody needs a $900 car payment, but I know a lot of people who have them. If you can cut that in half, $400 a month goes a long way as far as investing.
Yeah.
Just simple things like that. Do you need the $3,000 rent payment? Is there somewhere else you could go just till you get on your feet? And again, work on paying off your highest debts, your highest interest debts, getting rid of that, because no matter how much you invest, if you're paying 26% on a credit card, you're never going to win.
Right. I mean, certain times that people say, well, I need that money available that's on that credit card. So, what do you suggest as far as somebody starting out and, they don't have as much income as they once had, but, how would you have them attack that? I mean, I know you mentioned budgeting, and taking a good hard look. Is that what you're saying, that they need to do that?
Yeah, really look yourself in the mirror. And I tell everybody, these worksheets we go over, they're not for me. It's like going to the gym or practicing for sports. If you're cutting corners, you're cheating yourself. You're not cheating me. For me, if you move along with some kind of program and then you're not able to follow through with it, sure, that affects me. But
Right.
before you can put money away for the future, before you can really start investing, you got to take a hard look at where you're at today.
Yeah.
And a lot of times, if you can get out from underneath those credit card debts and you can start from zero, you can hit the investment a lot harder.
Yeah. I mean,
Again,
and also,
every month that goes by, that 26% is killing any potential gain you could have.
yeah, so just really get out of that. But people say, well, I need a credit card to build my credit, and I need a credit card so in order to do that, I know that's a whole game in itself. What
Well,
would you say to
the
them?
question there, and again, everybody's different, is, I use a credit card for everything. but I pay it off at the end of the month. You know,
Right.
and I accumulate points and credits and all of these things. And, you know, it builds credit. As long as you don't have more than, what is it, 30–40% usage of your card,
Right.
it builds credit. But again, you don't want to keep that going because you're paying a lot of times 26–24%. You know, if you're lucky, you can set up a 0%, but if your credit's an issue, you're not going to get those.
Right. Right. So that's a huge thing in itself. And you know, you have a lot of money. People don't realize that if you actually look at the interest part of what you're putting out on a credit card, you know, it could be $100, $200 a month. The minimum payments aren't paying anything, and you're pretty
Yeah.
much running in quicksand. So, you know, I can definitely understand that. And I've seen it. And so really start with your highest interest debts first. And that's what we tell people, and don't get themselves jammed up. And if you can go without certain things, you need to take a good hard look at your finances. That's everything from your bank statement, where your money's going, where your money, you know, and just you would be surprised. And I was surprised as I went through and I checked everything and really looking at it and try to see where you could cut and save and a budget and whatnot. So that's all part of it. But okay, so you get through this, you get your budget down, you take a good hard look at yourself, you have a little bit of money to reinvest. Say if you're somebody in their 50s, because why not? We'll start there. Just I'm in my
Okay.
50s and we'll talk. All right. So you're talking to a guy like me that wants to try to invest in something. Um, what would be the best options for somebody that's, you know, closer to retirement than further away? Would there be a chance to retire? And also, what are some options you think out there would be good for people to invest in?
So, you know, again, every situation is different. Being as that you're in your 50s, you're able to put away a little bit more money in certain things than other people are. Your risk aversity, you know, where you are in that, whether you're high risk, if you're closer to retirement, you don't want high risk. You know, you don't want to lose any of the money you're struggling to pull together right now. Depending on your health, there's different ways to go about it. You know, you could either maximize funding indexed universal life policy. At 50 years old, you could put $8,000 a year into a Roth account. Now, the money that grows in both of them is tax-free in retirement. I definitely steer people to either of those options, if not both, if the budget allows for it. And just because you can put $8,000 doesn't mean you have to put $8,000 into a Roth. You know, you can put whatever your budget allows into it. But I try to help people get a great picture on what retirement looks like and the amount of investing that needs to be done.
Okay. So, you know, looking at that sort of thing, what does a Roth IRA bring you? Like, why would you do that?
So I would invest into a Roth or IRA because you're putting money out of your bank account into this account. It grows. Um, Everything that grows into it is tax free. So like a 401k, if you had $100,000 in it, typically you'd get about 64,000 out, because the rest of it goes to the government. In a Roth, if you have 100,000, it's your 100,000. There's no more tax.
Wow.
Same thing with the index universal life policy. The better aspect of that, depending on how many income streams you have in retirement, is the money you can pull from a life insurance policy does not count as income, so it doesn't raise your tax bracket.
Okay.
A lot of times we use multiple streams of finances to avoid getting put into different areas. Another thing, if you have money in both, to call two economic strategy, money invested into a life insurance policy and money invested into a stock account. If the stock market goes down, you can pull from the life insurance policy and leave your money working in the stock account you have set up. That way, when it comes up, all your money comes up, not the money that you took out.
Oh, wow. Okay.
A lot of people don't realize that as they're going through, you know, in the first year or two, the money that comes out of those investment accounts pretty much set the tone for the rest of your retirement.
Hmm. a lot. I mean, so,
It is a lot. And, again, at 50 years old, essentially starting from scratch, it's a very tough thing. And, I stress to a lot of people, do you need a subscription to everything? Do you need that 70, $80,000 car? Can you get by with a leftover Nissan, whatever, that's at 0.9%? I mean, there's options out there to save people so much money. I mean, the difference in a point on certain cars is $3,600 over the course of a loan. So if you're at 5%, you can do the quick math. It'll cripple you. It doesn't quite add 50% to the value of the car, but it's aggressive.
Yeah. So, there's certain things that you can do. So that's why, taking a look at your budget, seeing where you are financially, seeing where you can, and looking at your situation on an individual basis is the best thing. So, and people, you gave some great advice today. If people want to get in contact with you, like what's the best way and how can they set up an appointment? And I'll put your information also in the link below, so they have your information too. But what's the best way they can contact you?
You can call or text me at any time at 856-673-8726, or email me at mchurch@evolutionfg.com. And I'll get back to you as soon as I'm able to. And we can move from there. There's no obligations during our first meeting. We just sit down, you learn a lot. We go over some things, we get some ideas. Maybe we sit down again, clear up some things you're unsure about, and go from there.
Yeah, great. I mean, you're in a position to definitely help people. I would definitely highly recommend Michael. You can get in contact with him for services. Once again, the link's below. And it's going to be a thrive after that reset. So that's what we're doing. We want you to thrive after reset. And Michael will definitely be able to help you. And thank you for contributing on today's show. And we'll look forward to hearing more from you in the future.
Right. One last thing I can tell people is that you're not the only one. We've all been through it. And I, for one, definitely understand. So just keep working towards it.
Yep.
It'll all be okay. Part of the process.
All right, great. Well, thank you. And you guys have a great day and looking forward to seeing you soon.